So here we go. It is episode 9, and we've just had the news that the interest rates have cut to 4.75% from 5%. Now, obviously, that's news that we're all waiting for, and we thought it might happen. Kian, I want to come to you first because this is a question that everyone's asking. Does that mean there'll be more activity in the housing market from this news?
I think, in short, yes. How much will remain to be seen. Obviously, we'll see that in the coming months. But if you look at the Rightmove price index for October, you'll see that the number of homes available for sale is up. The sales agreed is up 29% versus where it was a year ago. The only thing that hasn't really changed that much is the fact that it's taking longer to sell a property now. It's gone from 60 days now, it was 57% same time last year. But I think now that the interest rates are starting to come down on a bit more of a, dare I say, regular basis, you'll start to see more activity and hopefully a lot faster. What about yourself? Do you think there'll be much change?
Yeah, I think it will be. A lot of people that I've been speaking to that have been looking to get into the market have been waiting for it to drop. Now, whether this is a good amount, for any movement, once again, it's just one of those where we'll just have to wait and see. Because the question as well is, will the interest rate cut make mortgages and loans cheaper?
Well, that is the question. It depends whether the lenders will pass this saving or the percentage that is dropped to the lenders and then the lenders pass it on to the general public. Now, it's all to do with the swap market. It's the rate that the government lend to the bank and for the bank to lend to customers. At the moment, as we speak, I was reading that some lenders have actually taken their rates up, and some lenders are adjusting their rates. Before this announcement, I noticed a few lenders, I won't name them at the moment, but they were actually increasing their lending rates. But I guess it'll bring it back down to in line. If you are on a fixed rate, it makes no difference to you because you're in a fixed rate, whether you're in whether a year or 2 or 3 years, this will make absolutely no difference to you. If you are on a variable or a tracker, yes, that will probably make, because if you're on a tracker, which is kind of a percentage, you follow the interest rate itself, and as the interest comes down, so does your tracker mortgage. Then yes, it does help you. Whether lenders will pass this on, I'm sure they will. I am sure they will. They always do, because it's a healthy competition out there. Until then, we don't know. But I would say yes. My guess would be yes. They'll pass it on, and yes, the activity will start picking up.
Yeah, You mentioned the mortgages, the mortgage rates going up. I've got a question for you. Now, none of us are mortgage advisors.
No.
So we can't give advice.
No.
But I was having a conversation the other day, and I was told that towards this time of the year, every year, they do start increasing the mortgage rates. Now, I'm looking on the opinion of, okay, they probably increase it. It's coming to a slower part of the year where there's not much happening. Is it a readjustment so when they start the new year, they can start bringing them down rather than starting too low? Is that...
It's a marketing
From
ploy.
your opinion, is that what you think?
Yeah, it's a marketing ploy. So people think, oh my God, they have dropped the rates. It's January. Let's get on and let's buy the property. Let's get in the market. So there is that as well, certainly, and also whereby every lender has an allocation that they can lend out, and when they get to their allocation, then they think, well, hold on, we've reached that. We can't take on any more customers, or at least not at this rate. So they tend to put their lending rate up slightly so that if they get a client, then it's worth taking that client on at that rate and not at a cheaper rate. And then obviously it's like anything else. every year, every quarter, every 6 months, they get a quota that they have to lend out. And once they've reached that, then the rates go up until the next quota is released, and then they'll do it again. That's as simple as you're going to get it. Obviously, it's a lot more complicated than that, but that's as simple as one could explain it.
Okay, so will it drop again? Kian, I'm coming to you next. Will it drop again this year?
Well, the next one obviously coming up was it 19th?
19th of December, yeah.
I believe this time round, so 7th of November, they voted 7-1 or 8-1 in favour of the
Yeah, I think it was
reduction.
8-1.
8-1 in favour of the drop.
Yeah.
Seeing as the last time it was dropped, it stayed for the next month. I think obviously we'll come up to December. I don't see them reducing it further. I think it will stay at this 4.75 figure. I'm no economist, I'm no expert, but I do believe it will stay at this figure.
Do you think the same?
Yeah. I mean, look, it's very much interest rates. The reason they take the interest rate up and the interest rate down is to fight inflation. And obviously, without getting into politics, Donald Trump has now got in over the pond, which basically he has indicated in January when he gets him on 21st of January when he will go back into the White House. He's already said that he's going to put 20% tariff on every import, and obviously China 60%, but we're talking about 20% here. If he does that, the pressure, the inflationary pressure will be great. So, which means if that creeps back in, they have to put the interest rate back up again in order to fight it. So I think they will hold. I think they will hold in December. They won't do anything with it. Although we are at 1.7% here, but it could easily go back up if there's going to be a trade war. It's not just they put it up. UK will do exactly the same. They think, well, hold on. If you're doing it, anything that's coming into this country, we're also going to put it up. It becomes more expensive for the general public to go and buy the same item that they were buying by 20%. Inflation was obviously, without going into it again, inflation will creep in and we're back to square one again. It really depends on how that plans out. And then obviously, but they had earmarked 2 more for this year. I think they're going to leave it as it is. Next year, my prediction is that they're going to, if things go in the same direction as it is right now, probably 0.75% over a year period. So I reckon a year from now, we'll be settling at around 4% interest rate. That's my prediction, unless across the pond do things that will scarper the whole plan.
Yeah. Okay. So this news that was released today, who does it benefit? Now I know obviously we can say it benefits everyone, but who would it actually benefit? Everyone's been waiting out and holding to see what's going to happen. Everyone goes, oh yes, brilliant, it's an interest rate drop, but who's actually going to reap the benefits of this?
People that are looking to borrow money from borrowing in order to
credit cards, loans.
Yes, credit card loans, cars, store cards, you name it. People, especially coming up to Christmas, people tend to borrow money in and around the Christmas period. Yeah. And this will help, not a great deal, but it does help. So people can borrow and pay less, slightly less, in order to get the Christmas shop and everything else, presents and all that out of the way.
Okay, so it wouldn't affect the housing market as of yet, because we'll wait and see what the mortgage rates do. So that it wouldn't bring any new investors onto the table, is what we're saying.
Not at this stage. Not at this stage, unless, as we said, the lenders start competing against each other, and they start giving such a competitive rate. Only then, yes.
Yeah. Okay. Excellent. Well, that explains that side. Now, I did want to touch on one of the episodes that we had before, which was episode 3, where we interviewed. Obviously, I said it on episode 3. If you haven't seen it, go on and take a look. Keen, if we can stick that in the link below. That was before we created this panel. Obviously, I had the blessing of interviewing my father. So we'll stick that on there so you can go and have a look. It's very interesting. Learn a lot about his life. Now, there was a question from a Musa Ahmed. who has asked for an insight into why you think the crash will be coming this time round. Once you have a look at the episode,
and it'll be a deeper crash than before.
It'll be a deeper crash. Right. So if you haven't seen the episode, go on and check it out, because this will help you to understand the question. Now, we've spoken just before we started this. We don't want to go through it now, but you have said on episode 10, which will be our next episode, you're going to go through in depth on why you think the crash is coming.
Yes.
Yeah.
Absolutely, yes.
Excellent. So that'll be one to look forward to. Excellent. Well, that was brilliant. Thank you very much. I hope you enjoyed what we discussed today. If you did, please give it a thumbs up and subscribe, and we'll see you all on episode 10.